Hello, everyone. I am so glad you joined us today for fairs, festivals, markets, and shows. As Melissa stated, we'll cover general information, but you will leave this webinar with a better understanding of how Texas sales tax collection works at these types of events. The attendees or purchasers at these events are very important, of course, but we're going to focus on the tax responsibilities of both the organizer, also known as the promoter, and the different sellers at these events. Let's get started. At these events, places of business, there are three parties involved. First, there is the organizer who we call the promoter. The promoter oversees the entire event, arranges for and works with the sellers at these events. Then the sellers. Generally, sellers may have a booth, stall, or defined area where they sell their items to those attending the event. And of course, we have the purchasers. Now, I know I don't need to tell y'all how to shop. You have that role down. The purchaser's role is to make purchases, pay tax on the taxable items they buy, and to enjoy the event. Now that you know the parties, let's take a closer look at some examples of the events. These events can include trade shows, arts and crafts shows, antique markets, gun shows, and other types of markets, fairs, and festivals. They can last for a day, a weekend, maybe outdoors, inside a building, and in some cases might be in a building and the market is open year round. Regardless, these events are a place of business. Place of business? What is that? For Texas sales tax purposes, the general definition of a place of business is an established outlet, office, or location operated by a seller for the purpose of selling taxable items to those other than employees, independent contractors, and natural persons affiliated with the seller. In most cases, it is a temporary place of business. This applies whether you're a Texas resident or if you're an out of state vendor coming into Texas to sell your goods. For Texas tax purposes, selling at this temporary place of business can create a responsibility for both Texas sales and use tax and the Texas franchise tax. I'll talk briefly about the franchise tax at the end of the webinar, but for now, I'll just focus on sales tax. Let's dive into the promoter's sales tax responsibilities, starting with purchases for their event. When a promoter puts on an event, it is responsible for arranging, organizing, and producing the event. This may include purchasing or renting portable restrooms, janitorial services, security services, and even certain advertising services. On these types of purchases, the promoter owes sales tax because it is using these items and services for the event. Some of you may be familiar with the resale exemption, and we'll cover this exemption later in the webinar. But for now, know that the promoter cannot issue a resale certificate to the purchaser to buy these things tax-free because the promoter is not purchasing the items for resale. The promoter is using these items and services itself. In addition to the promoter being the organizer, they are also sellers, similar to the individuals that they have arranged to sell at their event. A seller is a retailer, wholesaler, distributor, manufacturer, or other person who sells, leases, or rents taxable items or services for consideration. Consideration? Consideration is the total amount paid for a taxable item or service before tax. For example, you buy a book for $15. $15 is a consideration, and taxes calculated and added to that amount. Let's see what a promoter might sell. If a promoter charges a fee to park at the event, this is a sale of a taxable service. The promoter is responsible for collecting sales tax on the parking charge. The same is true with an admission fee to get into the event. If the promoter charges an admission fee for the people to attend, that fee is taxable as well. Both parking fees and admission fees are taxable. Although the parking fee and admission fees are taxable, generally, when a promoter charges a fee for a seller to rent a booth or space at the event, that charge is not taxable. This is considered the rental of real property. The rental of real property is not taxable. Yes, even if the real property is a small roped off area inside of a big convention center or a space outside in a park. Let's look at how the promoter may bill for these types of fees. There are two options the promoter has for billing sellers for space rentals: lump sum or separately stated. The separately stated fees to use tables, chairs, electricity, and power strips are taxable. The separately stated fee for the space rental remains non taxable. When the promoter is collecting sales tax on the separately stated fees, sales tax is based on the location of the event, the temporary place of business. Let's review some examples. A lump sum fee for space or booth rental is considered the rental of real property, which is not taxable. Now, when I say lump sum, I mean one charge for everything. There may be an indication of what the rental includes, but nothing is separately stated. Let's look at our example. As you can see, the promoter's charge of $85 to the seller who is participating in Stephanie's Market is a lump sum charge for the space rental, which happens to include tables, chairs, and electricity. And because it's the rental of real property, the promoter does not charge sales tax. Let's look at a separately stated invoice. In the second example, you see an invoice similar to the one before, but the various charges are separately stated. In this case, the booth rental, table, chair, and electricity all have separate line items with charges. The rental of real property still stays non-taxable for $40. However, the other three items on the invoice are separately stated taxable items. The promoter will collect sales tax only on the taxable items, the $41. Now that we've talked about the promoter's responsibilities, let's talk about the individual seller's responsibilities. As a seller at a market or fair, there are some variables to consider: the taxability of the items you sell, and whether your taxable sales are exempt for some reason. We will talk about exemptions later, but for now, we'll just say all of your sales are taxable. That's the most common situation. What might you sell at these events? Okay, let's be honest. It's really about the food at these events, right? Yeah, vendors who sell prepared food like corn dogs, cotton candy, deep fried macaroni and cheese, and deep fried cookie dough. Yum! And even salads. Yes, salads are selling taxable items and must collect sales tax. The same is true if you're selling clothing, shoes, jewelry, art, and furniture. All of these items are taxable as well. One question we get from people who make items for a hobby is whether they too should collect sales tax when they sell their goods. The truth is yes, if the item is taxable. Regardless of whether it's a hobby or your full time job, if you make taxable goods and sell them, you must collect sales tax. For example, if you make candles at home or sew aprons in your spare time, just as a hobby, and you decide to sell them at your local market, guess what? You have to collect sales tax. Really, even if you sell these items just to friends or neighbors and not at a formal market, you still need to have a sales tax permit and collect the tax. Now, if you have a green thumb and your hobby is to grow vegetables, or you have fruit trees or pecan trees and you sell those fresh products, they are not taxable. Or if you love to make jam and jellies, they're not taxable either. But the main thing to remember is just because it's a hobby, being a hobby does not automatically make the sale non taxable. We've talked about taxable items, things that you sell and that you will collect sales tax on. Just as some things are taxable, some items and services simply are not taxable. Anyone can sell these items and not collect tax on them. It doesn't matter whether you are a regular business, an individual, a for profit organization, or a nonprofit organization. For example, face painting, temporary tattoos, and hair braiding are services you may find at one of these events. These personal services simply are not taxable. The provider of these types of services do not have to collect sales tax. Sellers who only provide non taxable services are not required to have a sales tax permit, and they are not required to collect sales tax. But please note, if the person doing the face painting also sells paints, stencils, or other taxable items, they would have to collect sales tax on the taxable items and, of course, would be required to have a sales tax permit. Or if the person braiding hair also sells combs, hairspray, gels, barrettes, or headscarves, those items are taxable and tax must be collected. Let's take a moment to recap. So far, we've talked about taxable goods and non taxable services. Now, let's talk about some exemptions. Again, this is general information for all parties to be aware of, whether you are the promoter, seller, or purchaser. Some items simply are not taxable. Do you remember hearing that phrase? Well, we'll talk a little more about that. Then we'll move on to times when the seller may not be required to collect tax on taxable items, and then to times when the purchaser may be exempt from paying sales tax on taxable items. Again, some things simply are not taxable. For example, certain food products are not taxable, like the fresh produce and jelly we talked about. To make it easy, I always like to say most likely, if you can buy or sell an item tax free in a grocery store, then the same is true at a fair, festival, market, or show. There is no tax due on the sale of non taxable food products. Examples are fresh vegetables, fresh cracked nuts, bottled sauces such as barbecue sauce and salsa, salad dressings, and mixes for food that you will prepare at home, such as a cake mix and pancake mixes. Also, water, including bottled water, spring water, sparkling water, or mineral water, is exempt from sales tax as long as it is non flavored water. There are times when the seller does not have to collect sales tax on its sales of normally taxable items. The first exemption I'll discuss is referred to as the garage sale exemption. It's for individuals who sell their personal items. The technical name, though, is an occasional sales exemption. Individuals selling personal items may qualify for an occasional sales exemption. Individuals who only make tax free or exempt occasional sales are not required to collect tax on their sales of qualifying items. To qualify, the individual cannot already have or be required to have a Texas sales tax permit or a permit or license issued by another state. Occasional sales include one or two sales of taxable items, regardless of price, during any 12-month period, or sales totaling up to $3,000 in a calendar year of items that were originally acquired for personal use by the person or a family member of the person selling them. The individual must get a sales tax permit and collect tax on all sales of taxable items in Texas, beginning with the first sale, which makes the total receipts to be more than $3,000. If, however, the individual is required to pay a fee or commission to participate in an event, such as a community wide garage sale or similar event, the occasional sales exemption does not apply. So, if you have to pay a fee to sell at an event and you choose to do so, you will need a sales tax permit and to collect sales tax on those sales. And in fact, on all sales after that, since the occasional sales exemption no longer applies because the individual is required to have a sales tax permit. If the occasional sales exemption does apply at an event, then the exempt sales need to be documented. In this case, the seller, the individual claiming the exemption, must give a letter to the promoter of the event with identifying information, including their name, address, phone number, and driver license. This is the promoter's proof why the individual did not collect sales tax on the taxable items. Without this letter, the controller's office will be unable to verify whether the seller was eligible to make tax-free occasional sales. Both the seller and the promoter must maintain records to document that the exemption applies. At the end of the presentation, please note Sales Tax Rule 3.316. That's our rule on occasional sales. Tax Publication 94-437, Garage Sales and Texas Sales Tax, and also Publication 96-211, Fairs, Festivals, Markets, and Shows. But don't worry, you don't have to write these down now. You will see all of this information and some other resources listed at the end of the webinar. The occasional sales exemption we just talked about is for individuals, a situation where individuals do not have to collect sales tax on their sales of their personal taxable items. Now, let's look at some nonprofit organizations that can sell taxable items and services tax-free. You may be a member of or affiliated with some of these organizations. Now, I've had people tell me that nonprofit organizations don't have to collect sales tax on fundraisers. Well, let me clear that up right now. Calling a sale a fundraiser doesn't make it any more or less taxable. Just to know that nonprofit organizations that are on file with this office as exempted from paying sales tax on their purchases as religious, charitable, educational, or have established their federal income tax exemption with us under the Internal Revenue Code Section 501c 3, 4, 8, 10, and 19 organizations, and each of their bona fide chapters can have two one-day tax-free sales or auctions each calendar year. If a qualified nonprofit organization uses the event for one or both of its tax-free sales days, both the promoter and the nonprofit organization should document these tax-free days in their records. During the tax-free sale, the nonprofit organization must inform its customers that the sale is a qualified tax-free sale day. The organization may do this by having a statement on the receipts or posting a sign at the checkout area. Similar to the two one-day tax-free sales for certain organizations, the law has a special provision for nonprofit volunteer fire departments. Nonprofit volunteer fire departments that have established their exemption with the controller from paying sales tax can have 10 tax-free sales or auctions each calendar year. Each sale or auction can only last 72 hours. Again, both the promoter and the nonprofit volunteer fire department must document these tax-free days in their records. During the sale, the customers must be informed that the sale is a qualified tax-free sale. The organization may do this by having a statement on the receipts or posting a sign at the checkout area. As many of you know, we just ended our 86th Texas legislative session. One new exemption I want to briefly mention today is by House Bill 2684. This bill exempts a taxable item from sales tax if the seller is a 501c3 nonprofit organization, the sale takes place at a county fair, and the purchaser is a person attending or participating in the fair. House Bill 2684 amends Texas Tax Code Section 151.3102. Keep checking back on our website at controller.texas.gov. We're currently updating our tax rules and publications to reflect changes from the recent legislative session. So heads up, you may see this exemption down the road. All right, let's recap. We've talked about exempt items, exempt sellers, and now we're going to talk about exempt purchasers. A normally taxable item or service can be purchased tax-free if the purchaser is an exempt entity or a seller purchasing for resale. Let's take a look at both of these types of exemptions. First, certain government entities and certain nonprofit organizations are exempt from paying sales tax on their purchases. The federal government and its instrumentalities, the state of Texas and Texas local government entities such as county, city, special district, or other political subdivision of the state are exempt from paying Texas sales tax on their purchases. These government entities do not have to apply for sales tax exemption with the Comptroller's office. They are exempted by law. Foreign governments and non-Texas government entities, however, are not exempt from paying Texas sales tax. Earlier, we talked about those nonprofit organizations that can have tax-free sales. And remember, they were religious, charitable, educational, and Internal Revenue Code Section 501c3, 4, 8, 10, and 19 organizations and nonprofit volunteer fire departments. Now, they are among the nonprofit organizations that are also exempt from paying sales tax on their purchases. There are other nonprofit organizations that qualify for exemption from paying sales tax. Sales tax exemption, though, is not automatic. Nonprofit organizations must apply with the Comptroller's office and be approved for the exemption from paying sales tax before they can make tax-free purchases. Once they are approved, their sales tax exemption can be verified through our Texas Tax Exempt Entity Search on our website. The sales tax exemption for nonprofit organizations is only for things that they buy that further their exempt purpose. They can't buy just anything. You may be wondering how these types of entities claim the sales tax exemption. Can they just tell the seller they're exempt? No, it's more to that. Sellers have to keep good records, and proof of an exempt sale is among one of the records they should keep. Now, the government entities have two options to claim sales tax exemption. The U.S. federal government and Texas state and local government entities can claim sales tax exemption either by issuing a purchase voucher or by issuing the exemption certificate to the seller. The exemption certificate is our Form 01 339 Texas Sales and Use Tax Exemption Certification. The certificate is for the seller's records. The certificate should not be sent to the controller's office. On the other hand, sales tax exempt nonprofit organizations must give the seller an exemption certificate to claim the sales tax exemption on purchases that furthers its exempt purpose. Now, let's take a closer look at the exemption certificate. Do you see a space for a number? No, you don't. In fact, and in all caps toward the bottom of the exemption certificate, it states this certificate does not require a number to be valid. If you didn't know, in Texas, there is no sales tax exemption number assigned to the sales tax exempt nonprofit organizations. Now, they may have some type of an identification number for other purposes, but not an exemption number for this purpose. Another category of purchasers who qualify for sales tax exemption from paying sales tax are sellers, like some of you. A person who has a Texas sales tax permit can purchase items tax-free that they will resell in the regular course of business. For example, let's say you sell greeting cards. When you purchase cards for your inventory, you would give a resale certificate to your supplier instead of paying sales tax. The sales and use tax resale certificate is also our Form 01 339. It's the front side of the form. And you'll notice that this certificate does require a number to be valid, and that number is your 11-digit sales tax permit number. You must have a sales tax permit to use this certificate. Sales tax is a transaction tax. Every time an item is sold, you have to look at that transaction. So when a seller buys a taxable item for resale, they will give a resale certificate instead of paying sales tax. The resale certificate is a seller's proof of why they didn't collect tax from you. And then when you go to sell the item, that's a different transaction. So you need to look at your customer and determine the taxability of that transaction. If you're selling to an exempt organization, you would need to get an exemption certificate from your customer. If you're selling to someone who is purchasing for resale, you would get a resale certificate. Otherwise, you would collect sales tax. We have just reviewed exemption, and that's great for the exempt entities, and it's good for you to know about exemption and resale certificates. But what about those customers who have to pay tax? And that's probably most of your customers. How much tax do you collect? The amount of sales tax you will collect is based on the location of the event, your temporary place of business. The state sales tax rate is 6.25%, and if the event is located in an area where local tax is assessed, the local tax can go up to an additional 2% for a maximum tax rate of 8.25% state and local tax. Just for fun, have you ever looked at your receipt and noticed the tax rate where you made your purchase? Those of you who shop in the larger metropolitan areas probably pay 8.25%, but those of you who shop in rural areas may pay as little as 6.25% and as much as 8.25%. Some local jurisdictions do not impose a local tax. This is why it is so important to know the tax rate of the location where you're selling. And we've made it easy. You can use our online sales tax rate locator to find the local tax rate where you are selling by entering the address of the event. After you've entered the information with the event's physical address and clicked search, a new page will come up that gives you the details of the tax rate for the address you entered. I went ahead and typed in an address for an event happening here in Austin. Here are the results. In Austin, there are two local tax jurisdictions, the Austin MTA at 1% and the City of Austin also at 1%. Together, the local tax rate is maxed out at 2%. Next, we have the state of Texas sales tax rate at 6.25%. This tax rate is statewide, no matter where you are in Texas. And finally, the tax rate you will collect from your customers at this location is 8.25%. If you go from market to market, event to event, even in the same city, the sales tax rate could change. So each time you sell at an event, be sure to check our sales tax rate locator to determine the tax rate for the location of the event and print that page for your records. Having that printed page will be very helpful when it comes time to file your sales tax report. If you have any questions about local tax, here are some excellent resources. We just finished talking about the sales tax rate locator, but our publication 94-105 and Rule 3.334 give you all the details you will need about local tax. And again, these will be written later on at the end of the presentation. We've talked about the seller being responsible for collecting sales tax at these events, right? We've said the promoter is a seller, and we've said that the individual vendors at the event are sellers too. Here's something you may have seen before, but not really noticed or thought about. Multiple sellers in one location. Is there one centralized checkout area? Or does each seller check out only their customers? And does this make a difference in who is responsible for collecting sales tax? Yes, it does. If the event has a centralized checkout and the individual sellers are not checking out their own customers, the promoter then is responsible for collecting and reporting the tax for all sales made by the individual sellers. You'll see this situation with a centralized cash register or checkout more often at an established location where sellers routinely and consistently rent space to sell, buy, or trade their wares. This may be an antique mall or market. Regardless, even though the individual sellers are not checking out their own customers and collecting the sales tax, they still must prove to the promoter that they have an active sales tax permit. Remember, they're still sellers. In this situation, both the promoter and all sellers will file sales tax returns. The promoter will report all taxable sales made by all sellers, including its own taxable sales, and will remit the total sales tax collected for all sellers at the event. The individual sellers will still file their own sales tax returns, but they will report only the amount of sales that the promoter collected on their behalf as total sales, but they will not report those as taxable sales. Here's an example of a sales tax report when there is a centralized checkout. Let's start with the promoter. The promoter had its own sales, taxable sales of $1,000 in admissions and also collected sales tax for the individual sellers, as you can see on the slide. Our first seller sold $4,000 in clothing and will report this on their total Texas sales. The second seller sold $425 in jewelry and will report this on their total Texas sales. Since the promoter is collecting the sales tax for the individual sellers, the sellers do not report any taxable sales, they report zero. The promoter is the one who is actually reporting the taxable sales. It's admission sales of $1,000 and the individual seller's sales of $4,425 for a total of $5,425 in taxable sales. Now, let's take a look at when there is no centralized cash register. If the event does not have a centralized cash register or checkout, both the promoter and the individual sellers must have active Texas sales tax permits and are independently responsible for collecting and remitting sales tax on the sales they make. For example, the food vendor selling hot dogs, the artist selling paintings, and the craftsman selling jewelry each collects tax from their customers and must have its own sales tax permit. The promoter must make sure that each seller at the event that sells taxable items has an active sales tax permit and will collect and report their own sales tax. The promoter must keep records showing that it verified the seller's sales tax permits and that the sellers were instructed to collect and remit the sales tax themselves. If there is a seller that does not have an active sales tax permit but is selling taxable items, the promoter should collect tax for any sellers operating without a sales tax permit. Otherwise, the promoter can be held liable for that tax that the sellers did not collect. Let's look at an example. For this market with no centralized cash register, all sellers report their own sales. The promoter made two kinds of taxable sales: admission to the event for $4,200 and parking fees for $2,000, with a total of $6,200 of taxable sales. Again, when there is no centralized cash register, the promoter is only reporting its sales, presuming all of their sellers have sales tax permits. Now, let's review how some of the sellers at this market report. The boutique sold a total of $2,000 of clothing and $1,000 of jewelry for a total of $3,000 in taxable sales. On their report, they will report $3,000 and remit the tax collected from their customers. Next, we have a hot dog stand. The hot dog stand will report its taxable sales of $450. And finally, we have the artist who sold a total of $900 of paintings and sculptures. So just to recap, regardless of whether or not there is a centralized cash register at an event, all sellers of taxable items must have a sales tax permit and will have to do some kind of reporting. And to get that sales tax permit, here's how you apply. It's easy and there is no charge to apply for a Texas sales and use tax permit. You can apply online, you can apply by mail, and you could even apply in person in one of our local field offices. Once you've received your sales tax permit, you are required to post it at your place of business, collect sales tax on all taxable sales, pay tax on all taxable purchases, timely report and pay sales tax to the controller's office, and keep adequate records. Now, you'll notice on your sales tax permit that you have been assigned an 11-digit Texas taxpayer number. This number helps us identify your business. And if you remember, this is the number that you will use on your resale exemption certificate. On our website, we have a public database of sales tax permit holders. You can use our sales taxpayer search tool to verify the status of your permit once you've applied. When you get your permit, you will be instructed to file your tax return on a monthly, quarterly, or yearly basis. The determination is based on the volume of sales expected for your business. This filing requirement will be adjusted based on the amount of taxes that you actually collect. Now that you know how often you'll be filing, whether it's monthly, quarterly, or yearly, let's talk about when your reports and payments are due. Your return is due on the 20th day of the month following the end of the reporting period. Annual filers will file a single report due January 20th. Quarterly filers with reports due January 20th, April 20th, July 20th, and October 20th. If a 20th falls on a holiday or weekend, the due date moves forward to the next business day. Now, listen carefully. This next statement is very important, and I want to emphasize this. You must timely file your sales tax return, even if you have had no sales for the period, or even if all of your sales for the period were of non taxable or exempt items and you did not collect any tax for the period. Even if there are only zeros to report, you still have to file a return. Now that you have your sales tax permit, you know when your reports are due, and you know how to find the tax rate you will collect. You're almost ready to start selling your items. That's exciting. But have you thought about how you will collect tax? Will you collect the sales tax on top of the sales price as we discussed before? Or will you include the sales tax in the sales price? If you choose to include tax included in the sales price of the taxable item, you must give notice to your customers that sales tax is included in the price. You should note the tax included statement on your customer's receipt or a note displayed where people would normally check out or be advised of the sale of the, like a sign at the checkout. For example, take a look at this receipt. You can see here on the total amount due, it states tax included. But what's important here is a clearly defined statement. Texas sales and use tax is included in all sales prices. This statement lets the customer know that tax is being collected on the sale of taxable items. When sales tax is included in the sales price like this, you must back out the sales tax so you will know how much tax to report. Here is how you back out the tax in a tax included sale. The formula is the sales price divided by 1 point, the tax rate, equals the tax base. The tax base is the amount that is actually reported on your sales tax return. Let's review our sample receipt from the previous slide. For example, if the item is sold for $21, tax included, and the appropriate sales tax rate is 8.25%, you would divide $21 by 1.0825. That equals the tax base of $19.40. The difference between $21 and $19.40 is the sales tax, which is $1.60. All right, you've collected the tax and now it's time to report it. Let's take a look at the short form. This return is for sellers who only sell at one location. If you sell at multiple locations throughout the state, and this will be most of you, you'll report on our long form. The long form allows you to report the tax collected for each jurisdiction where you participate in an event, market, or show. You can fill out and mail your report to us, and that's just fine. But the easiest way is to web file your report. Web file is available 24 hours a day, 7 days a week. To web file, you just need to create an account with a user ID and password. Webfile will calculate the tax due and let you pay online. We accept all credit cards and electronic check. And what's even better about Webfile is that we have video tutorials to help you get set up and to report. You can find these videos on our YouTube channel, TX Controller. For those of you who haven't had any sales, Telefile is a filing option for you, and it is also available 24/7. Remember in the beginning, I briefly mentioned franchise tax? Well, I didn't forget. I just want you to be aware that taxable entities that are organized or doing business in Texas are subject to Texas franchise tax. Consequently, you may have franchise tax reporting requirements in addition to sales tax. So please be sure to review our franchise tax overview webpage to see if this applies to you. And finally, as the promoter or seller in Texas, I hope you've enjoyed today's presentation, and I know you may want to know more information. Check out these rules that I've either addressed in the presentation or I think will be helpful to you. And here's going to be some publications also for you to look at. They are available on the controller's website at controller.texas.gov. And here's a continuation of the rules you might find helpful. And of course, the publications. And always remember, we're here to help. Call us at 800-252-5555 or come and visit us at a local field office or write us anytime at tax.help@cpa.texas.gov. Our phone lines and field offices are open from 8 to 5, Monday through Friday. Thank you all so much for joining us today.